Hello, trading is closed on July 25th, 2014. I'm Jeff Tennant. We had some targets from Wednesday, which printed today, 1985.50, which I thought would print yesterday, but which actually printed on the open, and 1984.50, which did print within its preferred time frame. The software identifies those prices. During the day, it said that this rally wouldn't stick and that the thick yellow line would be hit again, which it was. The sell signal in the afternoon had its target hit immediately, so there was no short trade, and there was support under the target. The importance of the status window in the software is that it reminds one that the target is 0 because the price was already hit. Just a reminder, a sell signal in mejt means there is a target at a lower price. Doesn't mean you have to sell right then if the target is too close or it's been hit. Well, there's no mejt stuff predicting what's going to happen Monday, so we have to use other things. This is Trader VIX to be top, I believe. Here's where I thought that the 5-year bull could be over. We traded to higher prices. They didn't go higher by much, maybe 6 points, and then they reversed immediately. Not only did they reverse under this high, they reversed under every high we've had in the last month. Not bullish. We stopped at a TDST line support level, which is not shown on this chart, but that was on the nose. The big sell from Trader VIX says you find the bar, which takes out the old high, which is here. Look for the low price of that bar. The true range, since that was a gap, would be 1973.63, the close of the prior bar. If that price is undercut, to be top says sell. We're awfully close. There are a number of other ways to look at the same thing. In red, we have an island reversal, pretty negative. In green, we have a cup with a handle sloping up, a break under the handle, a retest, and a collapse. That's not good, and it predicts that the low of this cup is going to be undercut. My system is the diamond on stilts, not mejt's system. That's a different system of mine. We have an inverted diamond on stilts. We have a stilt here, another stilt. Half a diamond's enough. The first test of the origin of the left stilt is usually resistance. We gapped over it, so now it's support. Here's support here. And at this point, you have to say, is this support and this the retest? In which case, you would anticipate a big drop. Or is this whole thing the first test of support? Usually, if it all happens this close together, the support holds, and if it does hold, we have a few upside targets of hitting this low in the 1980s and possibly closing the gap a little bit higher. I think that's what will happen, but I'm very reluctant to issue a long call when the overall market condition is so negative. And if I'm wrong about a rally up to the 1980s, we should undercut this low very quickly, ideally by a gapping under it. And I'm personally not taking any long positions. The risk that this will not work is too great, even though I think it's the most likely scenario. I think in the long run, we're going to go much lower, and the high of the 5-year up market could be in. And that is today's call.